Most people enter trading with the same dream: quick money, freedom, and an easy way out of the 9-to-5 grind. Apps like Robinhood, Webull, and Coinbase make trading feel simple. Just tap buy, tap sell. But here's the uncomfortable truth. If trading were actually easy, 90% of traders in the US wouldn't be losing money. And yet, they do. In this video, we're going to talk honestly about why most traders fail and what smart traders do differently. Let's start with a reality check. Trading is marketed like entertainment. Social media shows screenshots of huge profits, luxury cars, and one trade of the day wins. What you don't see are the months or years of losses behind those screenshots. The market doesn't care about your rent, your emotions, or your financial goals. It rewards discipline, patience, and probability. Most people bring none of those when they start. One of the biggest reasons traders lose money is emotional decision-making. People don't trade a plan, they trade feelings. Fear makes them sell too early. Greed makes them hold too long. Revenge trading happens after a loss. And overconfidence shows up after a win. The market is a psychological battlefield, and most traders walk in without armor. They react instead of executing. Another major problem is overtrading. Because trading apps are so accessible, people feel the need to trade every day, sometimes multiple times a day. They confuse activity with productivity. Smart traders understand that not trading is also a decision. Sitting on cash is a position. The more trades you take without a clear edge, the faster your account bleeds. Now let's talk about the US trading culture specifically. Zero commission trading and instant options access have made risk invisible. A beginner can trade options without understanding implied volatility, theta decay, or risk exposure. It feels cheap to enter a trade, but the losses add up fast. Many Americans blow accounts not because they're stupid, but because the system makes risk feel small, when it's actually huge. Another silent account killer is following signals. Discord groups, Telegram channels, Twitter alerts, everyone promises high-accuracy trades. But here's the truth. If someone had a consistently profitable strategy, they wouldn't sell it for $20 a month. Signals remove responsibility from the trader. When the trade loses, people blame the signal instead of learning. So what do smart traders do differently? First, they think in probabilities, not predictions. They don't try to be right on every trade. They focus on managing losses. A professional trader doesn't ask, "How much can I make?" They ask, "How much can I lose if I'm wrong?" That mindset alone separates gamblers from traders. Risk management is everything. Smart traders risk only 1 to 2% of their account per trade. That means one bad trade doesn't destroy them emotionally or financially. They use stop losses not because they like losing, but because survival comes first. You can't win if you don't stay in the game. Another difference is simplicity. Beginners think successful traders use complex indicators and secret strategies. In reality, most profitable traders use simple setups repeated consistently. Trend direction, support and resistance, and higher time frame bias matter more than fancy tools. Complexity gives comfort, not results. Smart traders also journal their trades, not just wins, but losses. They track why they entered, why they exited, and what they felt during the trade. Over time, patterns appear. Maybe you lose money trading the open. Maybe you overtrade after a loss. Journaling turns trading into a business instead of a guessing game. Let's be clear about one thing. Trading is not passive income. It's not easy money. It's a skill, just like coding, sales, or running a business. Anyone selling trading as fast cash is selling you a fantasy. Real traders focus on consistency, not excitement. If you're a beginner, the smartest approach is to slow down. Trade small. Focus on one setup, one market, one time frame. Don't rush to make money. Rush to protect capital. The goal in your first year isn't profits, it's survival and learning. Here's the mindset shift that changes everything. Stop trying to beat the market. Start trying to execute your plan perfectly. The market is bigger than all of us, but discipline is something you can control. In the end, most traders fail, not because trading is impossible, but because they treat it like a lottery instead of a business. If you're willing to trade less, manage risk, control emotions, and stay patient, you immediately put yourself ahead of 90% of people. Trading doesn't reward hope, it rewards process. Build a system, respect risk, and remember, your job isn't to make money today. Your job is to still be trading next year.